Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick with you as always. Hope you all had a great weekend. Busy show this morning. Let's see. We have the Friday evening news dump from Google and the Department of Justice. So we'll talk about that. Talk about winners and losers from ASCO over the weekend. We have a couple of M&A deals this morning and some interesting ratings on our radar as well. Our guest today, Nate Tobik, CompleteBankData.com, author of the Bank Investor's Handbook. He would join us at 8:35. Joel, what happened here over the weekend?
Over the weekend? Do you want to hear about my weekend?
Or overnight in the market? No, not really. Not really. Overnight.
Not really. Well, big follow through from that down open on Friday. Week close. Follow through opened at 27.41. They took it down to all the way to 31.25. We are now 17 points above that low of the session. Just looking to see what happens at Friday's low, 27.50. And that was also your weekly low. And then also your close is right there at 27.52.50. So there's a couple targets on the upside. If we go into retreat here, not much until you get mid-range on the session. That's at 27.39. Crude over $2 off its low of the session, 52.11. That up 84 cents doesn't tell the story. Big rebound trading just off the highs of the session. Gold, we pick on gold all the time and we say it never moves. Well, it's moving now. Breakout over 1,300, up $11.30 at 1322.40. Silver showing some life, not much, still not over $15, up 11 cents at 14.68. And our Bitcoin rally, not much, up $45 here at 85.40. Still trying to get up to triple digits. Let's bring in a triple D here. Busy weekend for you.
Yeah, just up at my cottage, so I was traveling over the weekend, and yeah, busy. Everything's busy. Cold, though. Cold in the D, cold at my cottage. We're in the 40s. So it doesn't feel like summer. When is summer coming?
Well, it's not here yet in Michigan. We did have a little bit of a taste of it. I think, was it on Friday?
It got to over 80 degrees. I think it might have been Friday. It was nice. I was like, oh, it's here. It's finally here. Oh, no, back to the 40s.
Short at 80, long at 50. Taking a little.
That's how you play the temperatures. I would agree with that. I think that trading range holds here for the next foreseeable future.
All right, a lot of news here this morning. You want to talk a little bit overall market? We don't have any major tariff news. I did see a headline, I'm not sure what time that came out, that China and Mexico may be willing to negotiate. I'm not sure if that coordinated with the pop in the market here, but any overall market thoughts here after that week close on Friday?
It's hard. I mean, they're selling rallies too still, so this market is right now broken for the foreseeable future until we get some type of deal. I mean, you've got two trade wars going on right now. It wasn't enough that the market just had bad news with one trade war. Now we got to get into the second trade war, and that's why the market obviously got hit very hard on Friday. Closed near the lows, continued to go down here overnight, although we are off the overnight lows. But how do you really get excited to come in and buy this market? What's the catalyst to really take us higher? If you get Trump doing a deal all of a sudden, but it sounds like they're both kind of, bearing in here. It doesn't sound like there's a deal imminent. So I don't see a reason why they're not going to continue to sell the rips. And that's what we've been seeing every time a stock, even individual stocks seem to pop. They seem to give it right back. Check out big lots from Friday, and this is going to be a good segue into our downgrade of the day. But BIG had good numbers, opens up near the highs, and basically gives it all back if you just look at the Friday chart in a matter of about 20 minutes. That's incredible. You see the stock opening up. You think, oh, yeah, these discount stores are doing pretty good. 20 minutes later, it gives back the entire 10% gain. Did end up closing positive, but it's giving it all back here again this morning, thanks to Bank of America Merrill Lynch, who are downgrading it, but they're taking it from overweight to underweight. So going from buy to sell price target $23 and they see some major issues. Not sure if you have that note in front of you, Spencer, but this big lots is just what is happening with the overall market. Every time we rally, they're quick to take the profits.
Not in front of me, no. But
anyway, so the big lots note is not good for bulls here this morning. The one thing is, you got to look at these lows, but I think the lows get taken out. This is a pretty bearish note. 25.73. Think about if you bought this thing. Now you're scared, especially if you were buying. And there wasn't a ton of people that bought it because it wasn't up there for very long. But it did trade up most of the pre-market session, did trade up near the open. And if you thought it was going to come back, I don't think it is. I think it is going to take out those lows of the move, which is 25.73. And then who knows? But it's just tough. It's tough to be buying stocks when every time you see them rally, they give it back. We had Applied Materials had a pretty good quarter. I sold in that rally. Glad I did, because it went up to $45 and boom, it's gone. Like, there is a few that have held on. Target has held on, not bad. But overall, it seems like selling the rip has been the play.
And that big lots, I don't know if was the New York Open 29.73.
Yeah, I think so.
Wow, look at that. So if you were long and you got 17 cents in it, and you're like thinking, okay, we're in the 30s. When it comes back down through that open, I mean, if you're buying that, I mean, you have to be very cautious. And that opening print, some buyers probably really got jammed on that. You gave the 20.
It's been down so fast. Like, I mean, if you this is how quickly this market, like, that's a violent move. And it's just telling you, you're on the wrong side of these earnings stocks in the first few minutes. This thing it opened, a couple minutes late. I think I got there open around 9:33 because they're probably putting it together because it's New York stock. And then you look at it, 10 minutes later, it's 26.20. I mean, that's incredible movement in 10 minutes. Just incredible. There's no liquidity in there.
You want to say 10 minutes? How about within, well, I guess 8 minutes, it was already at 27 even.
Yeah.
So, yeah.
These moves are so quick. And this is something I'm going to talk about when I'm in New York. They're going to put me on the big stage, I guess, for about 10 minutes. And I'll give you a little, I'm obviously going to be in the other trading room all day. So
can I take the over on that?
What's that? Oh, yeah, you can take the over because I'm going over 10 minutes. But anyways, so I'll be in the main room for, 10 or 15 minutes. I'm going to do a presentation on the flash crash. The flash crashes that we had, and I'm going to talk about liquidity. I'm going to talk about, I'm going to break it down. I'm going to break down, like we've done this on the show before, but I'm going to really break it down in depth, show you what happened back in the flash crash of May or of 2010, and then the other one in August of 2015. So May 6, 2010, August, I think it was like 24th or 25th of 2015. And I'll show you some tapes. I'll show you what happened. But basically the bottom line is, it's liquidity. It's a lack of liquidity. And what we see is, during news events is the majority of your trading, of your liquidity is high frequency traders. They're not sitting out there on a stock that just had earnings. They're not making tight markets on something like that. They're backing the hell off. So there's just nothing in there. So, and that's why you see a stock collapse so quickly. I mean, they're still in there to a certain extent, but they're backing way off. So liquidity is so low that you get some real sellers coming in and you see these epic moves. And that's what we see a lot of times, in individual stocks. We can see it in the market to certain times when there's a lot of risk out there, but it's violent off the open. It seems like all your stocks, to a certain extent, even on a non-news day, have less liquidity in the first few minutes. But I mean, when you have a news event like an earnings report, the liquidity is just very low.
They need some bigger, big orders to lean on in order to make.
There's nothing to lean on.
Right.
That's all high frequency trading really is. I mean, if you want to say it in a nutshell, and you can, how do I know about this? Well, I'll tell you, Bright Trading was one of your original high frequency traders. We were high frequency trading before we knew it was called high frequency trading. So, we aren't doing as much of it anymore. We still have some guys that would probably be considered high frequency trading. I don't consider myself, even though I make hundreds of trades a day, I don't consider myself a high frequency trader. So I'm not at this like millions of trades, but we were doing stuff, the envelope, the market making, all that kind of stuff back in the 90s. So, and using automation to do it. So it's just been sped up so fast that it's kind of pushed most other players out of the space, and we've moved on to statistical arbitrage. But I mean, all high frequency trading is leaning on orders. It's leaning on orders for protection. So if there's nobody willing to put a bid out there, they're not willing to put a bid out there either, unless you have an arbitrage situation where you can lean on something else. But they always need something else to lean on. So that's the bottom line, is if there's no bids, if there's no real bidder out there, the high frequency traders aren't going to bid either. And when you see, these epic collapses, they're backing the hell off too, because there's no real buyers in there off after an earnings event.
All right, no, that's a good synopsis of that. I guess, Spencer, you mentioned the Friday afternoon news dump, and boy, oh boy, stocks are open till 8 o'clock on Friday, right? 8 p.m. Triple D. Were you working that late this Friday?
I usually leave, and obviously I was traveling this weekend, so I wasn't doing a lot of that. But I usually stop trading on Friday. I sometimes come back if there's something going on. I got alerts and stuff. If there's some movement, I will come back to my desk. But I usually take off about 5:30, 6 o'clock. It's Friday night. I think 99.9% of your other traders are probably taking off then too. That's why you get these late Friday night news dumps. People trying to slide stuff through because they know I may not get seen on a Friday night, and it's true. The market reactions time on a Friday night is very low. So if there is some major news that comes out, sometimes it just gets forgotten by Monday morning. What was the Friday news dump here, Mr. Israel?
That the Department of Justice is gearing up to investigate Alphabet, Google, for antitrust violations. And recall that in 2013, the FTC had investigated Google. They didn't ultimately conclude anything from that, and so now the DOJ is like, all right, we're stepping up to the plate. It's our turn now. So DOJ looking into Google for antitrust violations, never a good thing to hear.
And Google is trading down, so they didn't get it through. They were hoping maybe to get it through on the late Friday night, but they are paying attention to it Monday morning. It is down 33 points here in the pre-market. Again, it's just another stock in my long-term portfolio taking a whipping, because I told you this was a bad month for my long-term portfolio. It was probably a bad month for anybody who is primarily long in their long-term portfolio, because the stocks have been straight down. But Google getting hit now too. I don't know. Is there any reason to come in and be a hero and buy it here? Maybe if you've got a 10-year time horizon like I do, but I tell you, this market is tough investing environment right now.
We had a little question earlier in the chat about earnings and stuff. Very hard to play. A lot of different conditions. What day do they report? What are expectations? What are analysts doing ahead of it? But a lot of times, your best indication come after earnings. You look at Triple M after earnings, gap down lower, never look back. Exact same scenario here in Google. You had the bad earnings report, and if you were just focusing on the high of the day that day after the earnings report, 1192.81 gave you a couple shots at it. It gave you a couple shots at it, and some wild moves here. 1120 back up to that area. But now, what are you thinking about? I'm talking about GOOG with the L now. And at this point, maybe wait for $1,000. Look at all those monthly lows between like 980 and 1,020. Get your bid out there if you're a long-term trader. If it doesn't come down to it, then it doesn't come down to it, and you can readjust. But right now, the monthlies are telling you, no major support until you get to $1,000.
You can write the puts too, but it gets down there, you're going to get a higher premium for it. I think it tests $1,000 too. Talking against my book again, because I'm fairly confident I'm the only person that does that. But I own it long term. But I'll tell you, from a short-term trading perspective here, I think it could go down to $1,000 too. I'm not selling it. I've been in Google forever. I'm going to stay in it. I believe in the company, but this market hates everything right now.
And
so it hates everything except Bitcoin, and like you said, it's starting to like gold a little bit, but it's tough to find a good stock. AMD held up fairly well, but even AMD had a weak day there the last couple of days. So there is some stocks that are still getting some love, but overall, this is like a full-on, there's a lot of stocks down in bear market territory. There's a lot of stocks down more than 20% in the last month, which is incredible.
Right. Chatterbox is asking us about DWDP here. And,
I can't even figure out.
How long did we spend on that?
Changed the symbol again here. I believe it went back to DD. So they change the symbol every other week in this stock. I don't know what reorg is, just a mess here on this, trying to figure out, what the symbol is, where or what's the platform. I believe they went back to DD. So anyways, I do have a quote for DD right now. So, but who knows? The stock is so confusing.
Yeah, they
spin off Dow, then they're bringing it back in, then they spin it off again, then they're going to changing the symbol again. Get it together. It's just so confusing as a trader when you have to change your symbol every other week. I almost at a point I don't even want to. I have to update all my systems for it all the time. It's annoying. So like I've got filter scanners looking, now you bring up DWDP. Oh, you don't get a quote. Okay, well, what's the new symbol? I believe it's DD. So can anybody confirm that? I have a quote for DD. I think it's DD now.
Hey, Des, I just want to ask you real quick. You said that, you step away from your desk on Fridays or whether, but you're getting alerts and stuff if something happens. Is that all do you come back and check your desk, or is that to your iPhone, or are you just watching the overall news? You said that, you step away and then you get alerts. I was just
I have some alarms that go off when the minis move. So I do have that stuff if it moves to a certain extent, but just on my iPad. My iPad will alert me.
Okay.
For the most part, I'm never away from it that long. I check it even on my iPhone if I've got it near me. I check it every, probably 15 to 20. If the markets are open, the equities I'm talking, not on the weekend or not open, and I'm not looking in the middle of the night. Only maybe once if I wake up to go have a pee or something. But if we're still like if I'm gone from 5:30 to 8 because maybe I'm hanging out with my kids, maybe even out for dinner, I'm gonna text. And then I have buddies that are still trading because we're all at Break Trading. You're all like on the same. You feel like you're on the same team. You're working the same company kind of. So if something's happening, somebody will text me. I'll get a text from a buddy say, hey, something's going on, and they, I've got lots of friends there. They know I usually take Friday night off. They're like, come back to your desk. I've had situations where I've been out at a restaurant. If the market's really moving, I was like, I gotta hop, and I go back to my desk. Try to get back as quick as I can to go trade the action, because when there's volatility, that's when I make my money. So, but for the most part, Friday nights are usually quiet.
Okay. All right. I was just curious. I mean, I'm checking the spoos, so it's just.
Yeah, you're doing the same thing, aren't you? You're probably on there throughout the night, checking every once in a while, eh?
Yeah. Oh yeah. Yeah.
As a trader, you're always money never sleeps.
No, it doesn't.
Jeremy Newsom guy was making trades last night. He said on Sunday.
I was communicating.
Like, you don't even take Sunday off. The Jeremy Newsom guy.
And he goes to bed late too, man. He was like, I got a text.
He's younger than us, though, Joel.
He's younger,
much sleep.
Not married, and he doesn't have any kids. So right there, that's a.
Well, that helps too. The kids eat up some time. I'll tell you. Love my kids, but they do eat up some time.
All right, Spencer.
There was something. Oh, I can't remember what it was, but somebody had broken down all the hours of a day. And like 24 hours, and said, you need 8 hours for sleep. You need 8 or 10 hours for your job. You need this. And it was showing you, well, if you do all those things, you have, still like 4 or 5 hours of spare time a day, like to do things that you really want to do. And I'm like, does this person not have kids? I was like, they didn't put kids in there because kids eat up like 10 hours a day. So I'm actually net negative in hours. I owe hours.
Oh, sorry, Spencer.
If I slept for 8, I haven't slept for 8 hours in 5 years.
Some of that's your own doing, though. I feel like
maybe. That's why I'm tired. I'm perpetually tired.
Wait, but I wanted to mention real quick. Joel mentioned the Google outage yesterday.
Oh yeah.
Sort of a glimpse into our future, because it didn't just affect Google products like Gmail or YouTube. It affected products that use Google as a hosting service, like the cloud. And we saw this a few years ago when Amazon had that big outage as well, AWS. But like Nest users couldn't unlock their doors or use their air conditioning. Like it's any company that uses Google, that uses the cloud, is vulnerable when the cloud hosting company goes down. So basically, we are all at the mercy of Google and Amazon, and that's the moral of this story: is we're all screwed. If Amazon and Google decide to go, goodbye, we're all done. That's the moral of the story. Anyway,
well, it's hard to be bearish those companies long term.
Exactly. We are all pegged to Google and Amazon.
Hey, Dennis, real quick, and only a 2-minute rant on this. RD asked any VIX plays. He's asking you individually, do you have any VIX plays for us?
I mean, I've always said Virtue Financial, but it hasn't been working very well this month. So even my VIX play is not working. Usually when my portfolio is getting rocked, usually my VIRT is going up, which is one of the biggest positions in my long-term portfolio. So usually it's helping out a bit, but it hasn't. It hasn't really helped out much either. I mean, it hasn't gone down really in May. They did that offering, that secondary kind of put a damper on it. And then there's the wild, what's holding this down too is that pesky little financial transaction taxes.
Yes.
With Bernie Sanders is kind of getting some, headway again. They've been talking about this for a decade, but Bernie Sanders is out there promoting, and I've had rants on this on the show too. Obviously understands zero about liquidity. So Bernie, if you're listening, if you start putting in a financial transaction tax, you're asking for no liquidity in this market whatsoever. And these big lots moves that we see in the first 5 minutes, that'll be on all stocks all the time. volatility would just go out, especially if you don't give market maker exemptions on that, which they would have to do. So here, they're gonna, it's the and I love, the way Bernie Sanders was, saying when he was on CNBC, like, or wherever he was. I saw the clip on CNBC like a couple of weeks ago, and he's blaming speculators for the financial crisis. Give me a break. It wasn't speculators in the market that was causing the financial crisis. It was banks loaning money to people who shouldn't have been loaned money on houses. The houses caused the financial crisis. So don't ever let somebody tell you that market speculators, people day trading in the markets, caused the financial crisis. The financial crisis was caused by people loaning money to people who shouldn't have been loaned money to. You got, people, tomato pickers, if you read The Big Short, getting, making $14,000 a year, getting a mortgage for $800,000. And that was just because the way it was all structured. It was the bankers that really did it. But you're not punishing the bankers by putting in a financial transaction tax. You're punishing the market makers and the traders who are out there actually trying to provide liquidity, giving a service to the market. So I completely disagree with the take that speculators cause the financial.
And any comments on the trial going on with HFT and the exchanges? They're going after the exchanges on that.
What are you talking about?
Joe Saluzzi's been tweeting about there's a case going against the exchanges giving preferential treatment to high frequency.
I mean, there's always, and yes, do the exchanges, give preferential treatment to the high frequency? Probably. It's their biggest customers doing all of their volumes. So, I mean, you can break it down and you can look, there's some pricing, they're obviously going to cater to their biggest customers. What business does not? So I'm torn there too. I mean, and I haven't talked about high frequency trading for a while, and I'm always torn here too, because we're borderline high frequency traders at Bright Trading, but we don't consider ourselves full on. There's definitely, and I've written articles about this, and I don't write anymore because I have kids. I just don't have the time to do it. But I wrote a lot of stuff about this stuff from like 2009 till 2014. When I didn't have kids, when I have a lot of time, I have that extra 20 hours a day to do some stuff. But there's high frequency trading, but you just can't blanket it all and say it's all bad. You can't say it's all good. You can't say it's all bad. You got to break it up by the strategies. There's always specific strategies that are helpful. Some of the high frequency trading market makers are doing a good job. They're providing liquidity. They're doing what they have to do. It's the predatory stuff that I don't love. And, and it's a hard thing to fix. Like, I mean, in the small caps are just a complete mess. If you have a small cap stock and it's got like, even like the KRYS, and Spinner would know this, the KRYS that we, own, and we trade it every once in a while, that thing's got like $1 spread all the time. So if it's like 30 to 31, saying 30 bid at 31 offer, if you go 30.01 bid, there's an algo that penny jumps you at 30.02. Then there's another algo that penny jumps that one at 30.03. Then there's an off-exchange market maker that can just simply match the quote. So your odds of getting filled on that bid are very slim until it blows through it. So you'll get filled at your 30 bid when it goes 30 offer. So, and then obviously you've been picked off by a more informed trader. So basically it's just forcing you to pay the spread. I mean, so is this the structure of the market got problems? Absolutely. Can we just blanket it all and say high frequency trading is bad, let's get rid of it all? Absolutely not. You can't do that either. You've just got to, break it down by the strategies. But I don't know how you fix a lot of the stuff either. I mean, I don't think the regulators know. That's why we're sticking with the structure that we have. And it's prone to flash crashes, which we've seen in the past, because high frequency market makers don't have any affirmative obligations. They can, just abandon the quote at any time, which is maybe an issue. But even if you give them affirmative obligations, I mean, how aggressive can they get with those? You can go back to 87 and say, hey, yeah, we had affirmative obligations and specialists back then too. They didn't pick up the phones, so, and we're really tough times, and the affirmative obligations are a nice thing to say on paper, but are they really practical, and does it really work? In the roughest of times, it doesn't. So it's tricky. Market structure is tricky.
All right, let's bring us back here to the news of the morning. We have
before we put everybody to sleep with a market structure talk.
Okay, we have some M&A here. German company Infineon Technologies is acquiring Cypress Semiconductor for $23.85 a share in cash. I saw a few other semis off this morning on this news.
You know what? This was one you buy on rumor and you made a lot of money. 27%. This was rumored all over the place for the last 3 days. We obviously saw it take off. I talked about trading the SMH even off at that day when that headline broke, but it only popped $1.50 and just kind of hung out. And you know what? Here it is. The rumor becomes true. So sometimes these rumors do come to fruition. And if you were buying it on that rumor saying, I think this deal is going to get done, you just made 27% on your money. So congratulations.
And I'm sorry, who's buying them?
German company. They're
really?
they're OTC. IFNNY is their OTC ticker.
Okay. Well, I mean, not much to follow. What's the cash price again?
23.85 comes out to $10 billion.
It's all cash?
Yep.
Yeah,
So a little bit of a discount here, Dennis, huh?
A little bit of a discount, not much though. I mean, the other deal too, if we want to talk about discounts for a second, this other one's got a bigger one. You got El Paso Electric getting bought here. Double E.
Yeah, 68.25 is the price for and that's getting taken private. But
and that's cash too. And look at the discount they put on this one. This thing's 65. It just ticked in the 64 handle. 68.25.
Yeah, that's it.
They put a 4.4 discount. That's a big one. Risk arbs, take note. I don't know. I haven't read the details on this one yet. It just broke right near the top of the show. Actually broke around 7:30, but I haven't got down. I was preparing for the show, so I actually haven't got down and actually read all the details on this yet. But if that's a cash deal, I mean, you're already getting a 3-point discount. Pretty good.
Is this the old? Wasn't there an El Paso like gas or something?
There was El Paso. It spun off some stuff. I can remember trading it.
Yeah, it was wild, wasn't it?
Yeah.
Yeah, I can remember.
I remember it. I think they did spin off into two companies a long time ago.
Okay.
But this E's been out there for a while.
Okay.
Sounds like it's going off the board though. Sounds like your risk arb traders giving a pretty good discount here again, 65.74. So I mean, some of these deals, and Red Hat too is the same thing. We talked about it on that one. Remember, Red Hat was trading down the 170s for a long time, mid 170s. Now it's sneaking its way up 185, 186 as they obviously think this deal is getting done. So, but you can wait a long time. I mean, there's time value of money here too, right? So we're not in a 0% environment anymore. So you got to give it, at least, probably 3%. So, if you figure this deal is going to get done 6 months from now, then it should trade 1.5% below the price just for the time value of money, not including any risk that the deal doesn't get done. So that's what you have to consider. When we were looking at these a couple of years ago, interest rates were lower too. So interest rates are a little bit of a factor here.
Back to the Cypress news though. I did see TSM trading up this morning. Qualcomm was up a little bit.
Yeah.
Cypress makes. I think they make the chips that are in car computers. So anyone in the car chip space would be trading up on this news.
We saw on the rumors, we saw the SMH itself even get a spike. So, and the SMH is trading up here this morning too. And Spencer's right. This is a very important day for the chips. He just said that in the chat. And I completely agree with him because these chips have been in the gutter. And now we get a deal in the sector. Can this kickstart a few of them? I mean, I don't know. NVIDIA goes down $3 every day. I mean, this is the worst non-sale I've ever done. I actually thought about lightening up at like 185, 190 just because it had ran quite a bit. And now the thing's at 135 and it's below where I even bought it. So here I thought I was a hero buying this thing back when everybody was selling it back in January. And now I look at it and the thing's giving it all back. It's unbelievably been in the doghouse. AMD is the only one that has held up. We know Intel disappointed, and it's kind of held up the last couple of days. It's trading up too. But most of your chips are trading up here this morning on this deal news. What happens? Do they just turn around and roll over and give it all back again? I don't know. That's going to be what's going to have to be determined here today. But if they do that, it's not a good sign. I mean, you just look and break down all the SMH components, and they've all been a mess pretty much, except for AMD, which has held up fairly well.
Hey, Dennis, what was there news on Cisco on Friday? Did you see this thing? SYY? Did you see the move that it had?
Food stock?
Yeah, it's a food.
Yeah, what was it? I did see a headline go by, Mr. Israel.
I don't know, but
there was news. There was news.
No, I was looking for
earnings.
Stocks. I don't know. Do you got?
No, I'm pretty sure there was a goldfish memory here. I'm pretty sure there was a headline that went by. What?
Well, all I know is I was looking for food stocks after Kraft Heinz did, what it did, and I was like, and I looked at Kellogg, I looked at something like, I gotta get short some food stock. I didn't even look at this one, man. This was up near an all-time high, and someone probably just said, "Hey, I want out of food here," and they pounded that thing. I don't see what the news is, but I don't think you have to be a hero in this today. You're trading down 30 cents. I'd keep a real close eye on the price action from today. 68.24, that was the low. The close of 68.62. So Maybe if you put a double bottom in or a triple bottom or at least something to lean on here, but just one day after. I wouldn't be a hero in this today, and until I find out what the news was. Mexico.
Yeah, you know what? They bring in some food,
though, isn't it?
Yeah. Is this an avocado?
It could be
avocado play.
It could be. It could be. Yeah.
I think it is that it's Mexico. It's the tariffs.
Oh, BZZT.
This is tariffs.
Top buyer says they trimmed their 3-year forecast.
That could be too. Whatever it is, that's an ugly chart. And this is not a chart you want to be buying in this market. I'll tell you that. When you get a candle like this, not even knowing the news, not even paying attention to it at all. When you get an ugly candle like this, rarely, and I mean very rarely, do you see this thing come back in the next month. You usually see it continue to drift lower. So just without knowing fundamentals and just talking the technicals, I see a candle like this, it makes me want to sell every little rally that it gets. Gets up to 70, everybody's underwater, they're trying to sell. Gets up to 69, 70, 71. You have overhead supply all over the place. Starts to take out the lows, and you have panic sellers coming in. This thing could be 62, 63 bucks in another month. So I think path of least resistance for SYY is down.
And I don't know how widely covered this stock is, but the analysts could come out on this one and with a downgrade or something.
Well, let's go take a look. Me and Spencer Israel can get you that information. So we will go to SYY and we will look at the analyst estimates, and we will tell you that
that's super well covered.
7 buys, 6 holds, and only 2 sells. So there's a few people who could come with potential downgrades.
Okay, Dennis, what was that avocado stock?
CVGW.
That was the Brentster play, and that thing I believe was down too. CVGW. Oh, it came back though. It was weak, and it went under 85 bucks, but it did bounce a little bit.
That's a wild day. That'd be.
It must have been other news on Cisco. It couldn't just be from tariffs, because some of these other tariff plays actually bounced back. Like Ford was kind of came back and wasn't down that much. General Motors, some of these automakers, they were all down. But a lot of them, did show they didn't continue. Well, I guess Visteon and Lear did. So
I stuck to my guns on Ford. That gap was just too juicy. You had a gap fill. You had from earnings 995 and then 953 filled the gap. I missed it the first time, but then when it broke down on Friday, it actually got to the low of the day before earnings, and it had 3 lows in that area: 930, 940, 934. So, hey, it was right in that area. I told myself when it got back down there, I was going to nibble a little bit. I did, but didn't. I mean, when it got back near 949, 947, 948, it was just a quick scalp. But I said I was going to do it when it filled that gap, and it did. So we'll see what happens with it today. Also, Barron's came out. I didn't read the whole thing, but they're like, don't worry about Mexico tariffs, But, I mean, that's
well, I'll tell you, I'm worried about everything. My long-term portfolio has had an ugly month, but I'm trying to forget about it because in December, obviously I panicked a little bit and sold some stuff I wish I wouldn't have sold. Trying to get the money back in there, didn't do it maybe fast enough, but I don't know, very torn on what to do here. Like I said, the other day, a couple days ago, I nibbled into some ETFs. I also nibbled into a small piece of Square. Which is wrong. I mean, I bought Square at like $64 at 62. So sometimes long-term investing can be painful. I'd love it to get to 50. And then I think I would start to buy some Square, because I still think long-term, when you're looking at analyst estimates, that there's possibility at this thing, and I still believe in the story. So I don't think Square is like going back down to like 20, 30 bucks here.
Can we do Beyond Meat real quick? Should we do Beyond Meat? Because Barron's panned it.
What they say doesn't even matter.
They're like, it's toast, all the stupid, things we use. And Spinner just pointed out
anything but toast the stock. The stock just goes straight up no matter what. I would not want to be short it.
First earnings report on Thursday. So
whatever they say, it won't matter. It doesn't matter.
Fundamentals are meaningless.
You lost $1 billion last quarter. Who cares?
Fundamentals are completely meaningless on some stocks. This one is too. So, I mean, this is just a story stock. The burgers are selling out wherever you go. I actually went to the grocery store because somebody else wanted to try them. I tried to buy them, and they were sold out.
I couldn't find them yesterday.
They're sold out.
Yeah. Go to Whole Foods?
No, I went to Meijer, and I couldn't. I was looking around, and I couldn't find them. So
the guy, the butcher, I asked the butcher there in the grocery store, and he says those things sell out like in an hour. Get them in. So, I mean, the story is there. It's not even that the story, the consumers are there buying. Is it have long term? And what he said to me, the butcher said that he's like, complete rip off. He's like, I don't understand it. 2 burgers are $8, but he's like, these people are people want to try it. So I feel like it's like, once the novelty wears off on this, like everybody's talking about it now. Once the buzz gets out of here, that's going to be, when the stock starts to actually decline. But the buzz is still going right now. People are still talking about it. Comes up in conversation, with random people. You go out for dinner and you're just talking. It comes up in random conversation. Not even like in on Main Street, not just Wall Street. Wall Street's been talking about forever, but it's still talked about on Main Street. When Main Street's talking about it, it can go for a little while. But eventually here, I don't think it makes any sense at all. But I'm not fighting that tape.
And why are you asking the butcher?
Because he was standing there, and I was like, "Where? I'm trying to find those Beyond Meat burgers. Where are they?" And he's like, "Oh, we're all sold out." And then I was talking to him for a few minutes. He's like, "Rip off," and I was like, "That's what he said." He's like, "Rip off" is what those are.
We got to guess.
We do, but let's keep going for a minute because I want to try to grab him in the background. So,
Okay.
Who's the guest?
Nate Tobik.
Oh, yeah, Nate.
Yeah, I need to talk to Nate. It's been a while.
But while I try to grab Nate in the background, I do want to talk about what was just on my list to bring up here. Centene, CNC this morning. Humana confirmed that they will not make an offer to combine with Centene.
The non-merger.
Yep, non-merger, and shares are trading down.
And Humana's trading up. So I don't know, just real quick in this Humana, 255, that seems to be an area of resistance. You have a pair of highs there, CNC, trading in the red near the lows of the session, right? It's 52.76, just under 52. I'd give a little buy zone there. 51. That's my area of support in CNC.
And anything for Humana?
Yeah, I just said I see a double top at 55.
Okay. Well, while I keep on trying to grab Nate,
Do you want to try and call him instead? Can you do that?
I actually do. This is weird. Do I have his phone number? I do. I do have his phone number. All right. Let's take a quick break and we'll grab Nate Tobik from CompleteBankData.com. We'll be right back. All right, welcome back, everyone. PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick still with you. Having a hard time tracking down Nate Tobik, so let's just keep
We're
on.
getting stood up by Nate.
No, I think he's going to join us here in a moment, but
Okay.
I'm having a hard time tracking him down. So in the meantime, though, before Nate rolls in here, let's do ASCO real fast, and we'll do ASCO until Nate comes, and then
Go.
we'll talk about
Break it down.
bank stocks. So ASCO, I felt really bad because I forgot to mention this on Friday, but it is perhaps the biggest healthcare conference of the year, or one of the bigger healthcare conferences. So a lot of news from Chicago over the weekend. Winners and losers. Great article in Bloomberg about breaking it down. And actually, here's Nate Tobik. So that was quite a tease because we're going to pause on that and bring on Nate. So Nate Tobik, can you hear me? Nate, are you there?
Nate's muted.
Nope, Nate's here. Nate, can you hear me?
There he is.
Yes. How you doing?
Good morning. How's it going?
Good, doing well.
Good to hear from you. Sorry on the delay. That was Joel's fault. I'm blaming Joel.
That's it. You know what? It was going to an email. I don't check that often, so that's my fault as well. So should be good from now on.
Is it hot where you are, Nate? That fan's above your head is going 100 miles an hour.
Right now it's really weirdly chilly. It was in the 80s yesterday. It's like 60.
Turn the fan off.
Now. Yeah, but that's why I got a sweatshirt on.
Are you in Boston?
Pittsburgh, Pennsylvania.
Oh, close. Okay. Are you coming into Benzinga Trading Summit?
No, when's that?
June 20th.
Oh, I'll be down in Florida. So talking about hot. Yep.
Florida in June. All right. We have to have you on today because the world is convinced that interest rates are going lower, much lower. Couple rate. I mean, why don't we go down like 3 or 4 times this year? I mean, the banks are acting like it. So I just want to confirm. I know you're tight with the Fed, and I just want to know rates are going down. How far are they going down? When are they going down?
I think they're definitely going down. It's a crazy, I was listening earlier, like it's just a crazy environment. And I think that there's a lot of flashing caution signs right now when it comes to banks, and lower rates are definitely going to be a tailwind, and that's going to help them out. But I think that we're also coming up to potential for some credit quality issues, and I think that's the biggest problem. So you're talking about a Friday night news dump. One thing that was really crazy this Friday was we had the first failed bank since 2017, and this was Enloe, Texas. And
there's a symbol on that?
There's no symbol. It was a private bank. But so here's where things get really interesting. And so I did some work on this over the weekend, and this is like a movie plot here. So basically, 2 weeks before the bank failed, the ATF was investigating a suspicious fire with people inside the building burning papers. And, then they failed 2 weeks later. So we started doing some research on our platform. The FDIC, so it's like a $30-something million bank. FDIC ate a $27 million loss, and the acquiring bank only purchased $5 million in loans. So start to take a look. We could only find $5 million in loans in our system. There's this just gap of they don't have other borrowers. They're supposed to be an agricultural lender. Couldn't really find any farmers in our database that were customers of theirs. So there's a lot of things that don't quite add up. It seemed like, this was potentially some sort of a fraudulent type thing, lending to friends and family who are running a fake farm. And that's speculation. But, point is, right now, ag lending is sort of in a recession already. And when you start to see failures like this, it's, they just can't keep it running as long. And, we had the failure of the bank in China. Rumors are floating around this morning that there's another one that might, another domino that might fall over there. And so with those external issues going on, I'd say this is kind of a trade very carefully type situation. So, banks look dirt cheap. If you look at multiples, I think it's Citigroup is like 6 times earnings,
Yeah.
and across the board they're all 10 times earnings, some less, some are 9. And you think this is crazy cheap, but if you think of this more as a cyclical, this is like buying U.S. steel at the top of the peak. It's like, yeah, it's trading at 5 times earnings, and then when the bottom falls out, it's 50 times earnings. And so my concern is that we're heading into something like that in the next 6 months, next year, and some of these earnings, so like in terms of earnings, let me back up. If you look at the last quarter, a lot of banks made their earnings numbers by going into lower quality credit. And I heard an analogy this week that is just perfectly fitting.
In 2006 and 2007, isn't this exactly what happened?
This is exactly what happened. This is it. And so I heard this analogy on a podcast. They said with banks, think of it as like you're going to a bar for the night after work, and it's not the first or second drink that's the problem. That's, those are the loans made right after the crisis. It's when they have a last call and you order a couple more shots of tequila. It's like when you're it's right at the end, you're just trying to squeeze in a little bit more. That's where things get really dangerous. And so JP Morgan, their last earnings came out about a month and a half ago. A lot of the earnings were from credit cards and from individual loans. And I mean, this is kind of bottom of the barrel credit quality. We see as banks are pulling back from mortgages. Almost all of them said we're done with mortgages. It's just not a good market. And when you get into personal loans, when it's like, even auto loans aren't good enough. We just need to lend someone $10,000, through the mail. Those are the warning signs. And I'm not saying anything's imminent, but it just, there's a lot of things stacking up that don't seem great.
I mean, there's a lot of other warning signs here too. Something that we've been talking about in the show for a couple of years here now is just this Deutsche Bank over in Europe. I mean, the stock goes down every day. It's down another 3% here this morning. It's $6. It's obviously, the biggest, or if not the biggest bank over in Europe. It's pretty darn close. I just don't know, like with the way this is trading, and you can go back, and the all-time highs were, I don't know, in the hundreds of dollars. It's at $6 here now. It sounds to me like it looks to me like it's on a death march here. Like there's going to eventually be some, serious problems here at Deutsche Bank. It's pricing in serious problems anyways. And what happens if, I'm not saying it's going to happen, but what if Deutsche Bank, starts to run into trouble where, is there a contagion issue here? I've asked this to a few other people, but I mean, none of these European banks look good. Is Europe going into their financial crisis right now?
I mean, I think that's a strong argument. And, the chart says it all. They've just been on this continual slide. And, so we've known back since 2014, 2015 that things weren't great with them, but they've been able to paper over it so far. And, so the problem is, will they actually fail? And what's that look like? So in terms of an investor, it's like, what are we down to, 677 here? And I think it was like 585 this morning from what I saw. You could short this into the ground, but I think there's bigger issues. If they do fail, that's going to put a massive hurt on Europe. But I actually think, it's kind of under the radar, but these Chinese banks, so we had China seized the bank, I can't even say the name, Boa Shang or something like that, a week or two ago, and the credit quality was just so bad. So they demanded that all of their banks immediately put together a report on their credit quality, basically. And so of those, there's a number of them that just did not submit this report. It's like when you're asked to give out, proof that you're in good financial health, and a bunch just refused to submit a report, that speaks volumes. And this one that's reported, it's a $105 billion bank that's reported on the edge of failure. Their auditor, after they failed to give out this report, the auditor resigned. And it's just got all the signs of kind of the next domino. And the issue in China is there's just a lot of bad debt that just keeps getting passed around. And in terms of the contagion, it's like, I don't know if China is just going to be isolated to China, right? They're so interconnected with us and with so much of Asia. And I don't know where it goes. And so, kind of the way I look at things right now is if you want to trade banks, trade around earnings, and also, it's, if you have a strong call on a bank, I would consider almost putting on a short to like the KBW bank index and then going long that regional bank. And so it's like try and capture what's different there. There's a lot of regional areas that aren't necessarily overheated, but if you're looking at banks that have been lending into like Miami, Chicago, New York, Seattle, I mean, a lot of those markets, it's like the credit that's coming on now, the projects that are starting up now, I mean, that's those couple shots of tequila.
All right, Nate. Wow.
Scaring me, Nate.
Yeah, I mean, as I was preparing for this, I'm just kind of going through all these notes, and it started to pull together this narrative, and I thought, man, this is a lot worse than what I had.
You're scaring me.
Yeah,
this make me sell my investment portfolio.
I'm ready, to put down my head.
Joel going to cash.
Just put on a hedge and go from there. But if we get lower rates, there's a lot of banks that could not figure out how to adapt and attract deposits, and so they're going to get a little boost because they could fake it till they make it a little while longer.
What about, you gave us a stock a while ago? Was it Bank of the Ozarks?
Yeah, that was a great one. So they let's see, they fell from like 35 to 21 on a bad earnings call, and then they had a last quarter. They said, we don't have any problems with credit anymore. And it shot back up to, I think, 34. And now it's starting to fall again. So this is, I trade this one on and off. And this is great because, every time bad news comes out and a bank falls 2%, they fall 5%.
So yeah, so if you're trading this and you're hedging or doing the hedging tactic that you're talking about here, you're just extracting that relative alpha from the stock being weaker.
That's it. Yep.
Nate, I got a question for you. So I've been doing some research on just the OTC bank stocks, most active month over month, most traded, and what is with the Mid-Atlantic region? It seems like there's so many banks in the Mid-Atlantic area of the country that are doing well, that are whether they're just their stocks are doing well and their loan growth is really doing well. So have you observed that, and why is that?
So I mean, we've seen that, and I mean that's where I'm at, is the Mid-Atlantic, and so I think some of it is you have a couple different factors. The first is you have Washington D.C. and as long as government's in session, the economy's going well there, and then that sort of trickles to the Baltimore area. I know in Pennsylvania, we're getting projects that it's in Pittsburgh, it's crazy. You've got Google and all these tech startups, and their buildings are going up like crazy. And there's all this pent up demand for loans that just hasn't been here for a long time. And we see the same thing if you go down into Maryland, Eastern PA, Virginia. It's a hot market right now. And, it's also a lot cheaper. If you move out from New York to Philly, that's a significant cost savings right there. And then if you go from Philly out to say like Lancaster or some of those other peripheral areas, you keep saving money, and people keep doing that. And so there's a lot of growth in that area of people just trying to escape New York.
Nate, I want to just touch on one other thing. First of all, we're going to get you on a lot more. You're great here. I really love your analysis, and I know you're just doing it. I mean, you have all this bank data, and you're just looking at pure numbers here. So if anybody thinks, Nate is like, scare tactics or anything, this is information. This is what he does. This is how he follows the markets. And I think you're doing a great job of it. Where's Bitcoin come into in the whole banking system?
Good question.
I mean, in transactions, I know it's a big jump here, but you have to take it into account into the market. And, what wire fees? I mean, if just one thing, if someone said, hey, every time I do a wire, 15, 20, 30, 40, $50, some of my banks let me do it for free, but just talk about Bitcoin and its potential impact on the banking system.
Sure. So I've always heard if you every time you hear the word Bitcoin, if you substitute it with the word slow database, that's kind of what it is. So, would we want to transfer money with a slow database? Bitcoin definitely has some scalability issues. It's if you think about how many wire transfers are happening a second, how many ATM transfers are happening a second, and versus how many Bitcoin transactions happen a second. So it's at its infancy, and there's a ton of hype around it. I think it's very easy to dismiss it, but I think there's some sort of a seed of something interesting there as well. And I would say right now the Bitcoin market's very fascinating because I get the sense that there's a couple big players that are kind of moving things, and there's a lot of traders who are hanging on and don't quite understand the dynamics of that. But that said, I think ultimately, there's probably some lessons that could be learned there and adopted in the financial sector. What we see is there's all these fintechs doing payment stuff, and they're all just trying to replicate what banks are already doing and just doing it in a more technologically efficient way, versus Bitcoin's doing something totally different. And I think when there's something totally different, that's where innovation is, and there's probably a lot that could be learned from that. I don't know exactly how it's applied, but it is interesting. Yeah.
Nate Tobik is the founder of CompleteBankData.com. If you are a trader in the financial sector, you want to get some data and for your due diligence, this is a great resource for you, CompleteBankData.com. Nate Tobik, as always, thanks for the time, and have a good rest of your week.
Yeah, thanks for having me on, guys. I had a lot of fun.
All right.
Talk to you again soon.
Thank you. All right. Bye.
All right. 8:56 here. I do want to get to ASCO real quick before we go.
Sure.
So let's do this ASCO stuff. So as I mentioned, a lot of biotech news over the weekend. Winners, losers, courtesy of Bloomberg. AstraZeneca, big winner over the weekend. They partnered with Merck for a drug that slowed the spread of a rare form of pancreatic cancer. So AZN should be moving this morning. Iovance Biotherapeutics, a big winner. What is it? IOV.
Hey, you're the one who gave me this.
I gave you that. IOVA, yeah, I gave you that. That was like 2 hours ago. IOVA, big winner. Another one we have here, Deciphera Pharmaceuticals. Don't know the symbol on that. I apologize. Merck, who I'd already mentioned, they're a big winner as well. Some losers, Turning Point Therapeutics.
Wasn't that a Martin Shkreli stock? Turing? Didn't he have something to do with that? No? Scratch it.
That doesn't ring a bell. TPTX is the symbol there. I think they were down on Friday. Nectar Therapeutics. I haven't seen what the chart is doing, but NKTR, they also had some headlines come out on Saturday.
It's up 3%.
Yeah. So those are your quick highlights from ASCO. Sorry we couldn't spend more time on that, but I wanted to.
Is it over now? This was over, and there's
no. I think it ends today.
Okay, so we're still going to get headlines coming out of there.
Potentially, I think it ends today.
I think for that, and you just ripped through a bunch of stocks here, and instead of going over individually, I'll just stick with, look at the good news. Look at the pre-market high. See if it coincides with a daily high, weekly high, or monthly high, and see if you get followed through on that level. That would be on the downside. If there's been bad news on something, see what the pre-market low is, see if there's some daily, weekly, or monthly support that coincides with it for more follow through on the downside.
Or just trade the IBB. That always works.
Right. All right. Triple D, we're climbing back here. We're down 3.25, down 3 handles. So the buy the dippers last night here are looking okay. What do you see?
We've got a couple deals. Like we said, the semis are a source of strength here today. Big time SMH is now trading up over 1% here in the pre-market. And that's on the backs of the CY deal. But I'm not seeing really anything getting destroyed here either. Oil has bounced back significantly. I think that's probably one of your major drivers, because like you were saying, this was significantly down overnight. Not only came back, but now is like significantly higher. So oil looks like a complete reversal here today.
What about that ExxonMobil? Is it getting near after earnings, this thing just got
Well, I've said that. If it got back down, I've played it a few times. on a swing trade from the low seven, right from the mid 70s, and then up towards 80. I've sold it again. I sold it back when it got up to 80. It's back to 70. I probably should get back in there again, but I don't know. I mean, this oil chart is, even though we have the rebound today, and it is a nice rebound here, and we are definitely oversold. So oil was due for a rebound. So it's nice to see it finally. I just don't know longer term here. I think the trend is still not your friend with any of the oil companies. So yeah, there was a nice, deal obviously for APC, but I don't know if there's any other deals. We speculated about a few other ones. I tried to play Apache, APA, on a speculating that maybe it could be another one that could get acquired, and just, hasn't materialized. So a lot of these oil companies have higher dividends, but their businesses are just in the gutter.
Look at this Oxy too, man. This thing continues to roll over with Warren and Carl both in the stock.
Yeah.
But one last thing, Dennis. Let's just keep an eye on the book in ExxonMobil here, because between 80 and 82, for today, and I mean, this is going to be a longer term exercise.
What about 70 though?
No, can you get 70?
Yeah, let's go look at the buys and see if there's some buys in there. 70, 69,000 early though.
Yeah, it is.
A little bit.
Between 80 and 82 and a half, I remember just saying, well, there's, or actually it went up to 83 and a half, but it started at 80. And you were mentioning, big orders at 82, 82 and a half, 83, 83.
Big money was selling.
And it's like, and you kind of lose track of it, right? But then, and I remember in the back of my mind, I'm saying, I'm going to look at this in a month or two and see where this is at. And you know what? Here it is. It's dropped $12, $13 from that.
Sometimes the big money's right.
Exactly. All right, let's go to Spencer, wrap things up.
Yeah, I just want to, before we wrap, a couple other earnings on our radar. Teva getting an upgrade this morning from Oppenheimer to
upgraded Teva. Look at that.
Upgraded Teva.
How much is it down? Oh, it's up 28 cents.
Look at that. It's a big rally. The generic drug makers, there's maybe nothing weaker than the generic drug makers. Maybe we're not going to have generic drugs anymore. Mylan Labs, MYL, I had that at one time. So glad that I didn't hold on to that one. Teva, I don't know if I thought about buying Teva before. I'm glad I never did. Even when Warren was buying it, I was like, man, Warren's buying it. Maybe I should be buying it. Glad I didn't. Warren, and I guess it wasn't his pick, but holy cow, I was wrong on that one. But I mean, you can go and look at, there's Valiant, obviously, which is I always call it Valiant still, but it's BHC, Bausch Health. I mean, that's in the gutter. All these generic drug makers have just been slaughtered.
And one more, Waste Management getting an upgrade this morning from RBC to outperform.
That stock's just been unbelievable. Had it in my investment portfolio at one time, and I sold it. And I wish I never would have sold it. That just looks long-term investing. I mean, look at that long-term chart. 2012, this was $30 stock. It's 109. I mean, it's a business that obviously everybody, it's defensive. We got a lot of waste. Waste continues to be an issue. I mean, I don't know. I guess this stock's been unbelievable.
All right.
This continues to go up.
That'll be it for today's show. If you want a full day of Joel and Dennis, you can hang out with them at the Benzinga Trading Summit June 20th in New York City. Go to bzprofit.com, enter the promo code PMP15. That's all caps, PMP15 to get 15% off your ticket, including to the exclusive trading lounge where Joel and Dennis will be all day, as well as other guests and longtime friends of the show. Thank you to today's guest, Nate Tobik. Thanks to all of you in our chat. Please remember, all the information on our show is meant for informational purposes only and not meant to be investing advice. Hope you all had a good weekend. Hope you have a good rest of your day, and we will see you on Tuesday.